Welcome and thank you everyone for joining today. We're very excited for our topic of discussion, global transformation and payments. A quick reminder, all attendees have been placed on mute for the duration of the presentation. If you have any questions, please submit them through the question portal. We will take time at the end of the presentation to answer them. You'll also have a series of polls throughout today's webinar. Participation is highly encouraged as this helps us cater future webinar content and answer your questions. A recording of the webinar will also be sent out in the next few days following the webinar. All past Alere webinars, as well as a recording of today's webinar, can be found on the Alere Inc. YouTube channel and alere.com. So just a quick overview of today's webinar. We will do an introduction from the folks on the line, also go over our experience in the industry. We also are going to go over global payment trends, ISO 222 adoption study, ISO 222 implementations, which will also include considerations, goals and challenges, strategies. We'll also take a look at ROI and TCO benefits, and then again, we'll have time at the end of the webinar for Q&A. So, just a quick intro. My name is Alex Hintz. I am one of Alere's business development managers, and I will be your moderator for today's webinar. We also have Mike Paula, who is one of our Treasury consultants here at Alere. Mike, if you don't mind giving a quick introduction for the group today.
Sure, thanks, Alex. My name is Mike Paula. I'm a part of the Treasury Advisory Services practice at Alere. Primary experience in ERP and TMS implementation, along with advisory regarding business process improvement, system recommendation, and selection. Back to you, Alex.
Thanks, Mike. So just a quick background on Alere. We've been in business a little bit over 15 years, obviously founded in 2005. And we have a lot of different offerings that can help you. So we help our clients by partnering to efficiently implement, integrate, and upgrade their software investments. We also provide strategic guidance and business process improvement to help really our clients unlock the potential of their software investments. A deep commitment to excellence and quality is one of our core values. But the main point that I want to highlight is the last one, which is a trusted advisor. And that's what we look at ourselves to our clients, and that's how they feel about the work that we provide. Just a quick overview of the practice areas that Alere has to offer. Like I mentioned previously, we were founded in 2005, and we really got our start with our dedicated Treasury expertise. From there, we've grown into different areas, including PeopleSoft, Oracle Cloud, and again, kind of a point that I alluded to on the last slide, our strategic advisory services for optimization assessments, business process improvement. But we really have a breadth of experience that's relevant here today for this webinar. And lastly, this is something that I want to show you, which is a standard NASCAR slide, which includes our clients. But again, getting back to that trusted advisor status, we feel very confident that if, in fact, you guys want to have a conversation with us after today's webinar, and there is someone on this screen that makes sense to connect you with, we'd be happy to set you up. The differentiator for us at Alere is that these are real relationships. Again, getting back to that trusted advisor status, we feel confident that they will speak volumes as far as our expertise in this area. And again, we'd be happy to connect you if a point that it does make sense. Mike?
Thanks, Alex. So just to reiterate, I'll start off with essentially some trends from a global payment perspective, touch on some cloud software strategy trends, and then ultimately dive into everything ISO related for the duration of the presentation. So for starters, I'll read off some statistics here from a global payment perspective and trends. 80% of firms are currently transitioning business-to-business payments from paper checks to electronic payments for increased efficiency and reduced cost. So as much as we all love our legacy checkbooks, essentially the industry is moving to these electronic payments, and really with all things considered, thinking about the paper trail that involves checks, the costs including printing, postage, mailing, things of that nature, it's essentially roughly 10 times as expensive to cut a check and 5 times as expensive to receive a check. So there's really no surprises with, the move in the space from this perspective. 50% of firms deliver their payments from a single centralized corporate treasury operation. So really what this does is eliminates the siloed and segregated teams, whether you're transacting business just domestic or internationally, but it really cuts out, a lot of the middlemen and keeps it centralized and having a skilled and trained workforce within one area. Centralized payments operations are providing numerous benefits, including economies of scale, reductions in the number of bank connections, and centralized cash flow. So from a bank connection standpoint, depending on how many banking partners you may have, every time that you essentially want a new bank connection or you want to remit payment to a certain bank, which is normally done by country. So if you are transacting business internationally, you're going to need a connection based on each country. So really what these centralized payments do is rather than engaging multiple different banking partners that you may not need, if you're able to centralize the structure, you're really going to cut down on implementation costs from the banking perspective, them obviously engaging their resources on their end, going through, the cadence of testing and whatnot before getting obviously live with production with your payments. And then obviously the time savings from, an enterprise standpoint of your resources having to go through this process on your end. And finally, fraud remains the top concern, with 55% of firms surveyed listing as the top payment-related challenge that their team faces. So really when you think about, chargeback costs, cost of acceptance, things of that nature, obviously these solutions, the security and fraud solutions costing money, but it's about really building a foundation for fraud prevention, not only for now, but also for the future. So a couple more here. Trends within this payment space. So global digital commerce volume exceeded $3 trillion in 2017 and will more than double by 2022. The Asia Pacific region will increase its share to nearly 70% by 2022. So really this involves mobile commerce. When you think about where the world is going today with mobile commerce, in-app payments, mobile browser payments is really the driving factor behind this growth. You think about all of us being on our smartphones 24/7. And the increasing shift towards online shopping, this is really what's driving this movement. A remarkable tipping point where enterprises are now outpacing consumers in their adoption of emerging technologies, including artificial intelligence, blockchain, digital assistants, and the Internet of Things. So really, new technologies are no longer just being developed and tested in what you might call essentially a development environment or a sandbox environment, but rather they're now being applied in more of a practical manner across operations to drive new business, create new value, and ultimately build more sophisticated and advanced applications to achieve a higher degree of automation and reduce manual intervention. Fintech solutions such as RippleNet, Currency Cloud, Stripe, Zipmark, and Citation have created blockchain and SaaS technology. So this really involves the move away from the on-premise approach, which is slowly picking up speed as the years pass. But with the on-premise approach, you have different application instances for essentially each business or business unit, especially if you're transacting business internationally. And with this SaaS technology, the move there, with this technology being developed and managed and maintained by the actual application vendor themselves, it's really cutting back on the support model needed from the on-premise days and ultimately allowing, the application to utilize more of a multi-tenancy architecture with multiple business and users, multiple companies within that same architecture, however, having their own silo with data partitioned accordingly, so there's obviously no overlap and breach of data or security. And finally, the Europe PSD2, which PSD stands for Payment Services Directive, requires banks to grant qualified third parties automated access to customer transaction accounts. So really what this means, the automated access is really just connectivity to access customer account data and initiate payments for qualified payment service providers that cover both retail and corporate customers. And the ultimate goal is to provide lower costs and higher security for customers, which essentially affords merchants greater flexibility to differentiate customer experience from a payment perspective and keep those customers happy. So moving on to a few trends within the cloud strategy or cloud software space within roughly the next 5 years or so. 80% of all enterprise and mission critical workloads will move to the cloud. This really comes from the capabilities within cloud from a flexibility, reliability, and performance standpoint. Enterprises are already consuming a lot of public cloud resources today, and these mission critical workloads are an increasing part of that consumption as the months and years pass. 90% of enterprises will use a single identity platform that bridges on-premise applications and the cloud. So with the increased amount of privacy regulations in today's day and age requiring immediate audit capabilities across applications and services, this is really what's driving organizations into utilizing a unified platform, which ultimately helps to speed up the provisioning of new applications, users, and devices. 85% of customer interactions will be automated. So really this is being driven by the artificial intelligence development. So when you think about natural interactions, easy engagements, and essentially predictive recommendations, as you know, if you seemingly type something into your browser and then, you log into a social media site, all of a sudden you're getting hit with sales ads magically, almost instantly. So, and if you think of just from a customer service standpoint, voice assistants and chatbots, they're covering, roughly 80 to 90% of enterprise customer service functions are utilizing those tools. And the ultimate goal is obviously 24/7 around the globe, anywhere, anytime engagement. 70% of IT functions will be completely automated. Obviously, there is a lot of daily and routine and complex IT tasks that take up a large amount of time, but they have to get done, which ultimately makes them a perfect target for automation. So the space is really trending towards more of a managed services approach with, an increased amount of service level agreements, but that will ultimately decrease security threats and allow, essentially your core business users to focus on the more pertinent business outcomes and improved processes that really drive new value for the enterprise. And finally, security-related events will increase 100 times, and automation will become the most reliable way of preventing, detecting, and mitigating threats. So obviously with the cybersecurity increase and trend within just across the world, organizations are facing really an overwhelming number of security-related events every day. However, a very small amount of those potential threats are actually found to be legitimate, but that essentially takes up a lot of time from a prioritization and troubleshooting standpoint of IT departments and security departments to deal with those and figure out, what's important and what's not. And now moving into really the core topic of this presentation and where the global payments transformation is occurring. So ISO 20022, or as you heard Alex refer to it, 222, I'll probably refer to it as both throughout the webinar here, but it is the same thing. So by 2023, it's expected that ISO 20022 will represent 79% of the market volume for high-value payments and will be 87% of market value from a dollar perspective for all payment types. So really the takeaway here is that ISO has been a global success. It's adopted by market infrastructures in more than 70 countries, really started in the Eurozone from a SEPA payments perspective, and is now the principal standard in the instant payments market, implemented in Europe, the US, and Canada, just to name a few. As of September 2019, the US Federal Reserve and CHIPS have delayed their initial November 2020 start date for ISO 20022 Fedwire adoption. So the plan was to start this implementation from the Federal Reserve in November of 2020. However, it's been delayed. Now, this does not take away from the fact at all that they are still going to adopt, ISO as a standard. I'll touch on essentially their three phases of the approach that they were taking, which has really made them take a step back and consider more of a same day, or you might refer to as a big bang go live approach. Really what that comes down to is if, a phased-in approach may cause, when you're thinking about international business and payments, cross-border exchange issues with various financial institutions. So if these payments are not fully enabled within the same day, the financial messages using that ISO format may get truncated and data may be lost in translation. So this information is all easily accessible, really on Google, just looking up the Federal Reserve ISO adoption timeline. I think it was a press release by the central bank in September of 2019, so you can keep an eye on that to see when they're planning to start that back up and really roll out that full timeline. Now the last three bullets here are all regarding the SWIFT Global Payment Initiative. So global cross-border ISO correspondent payments, volume of 300 billion plus USD are sent daily. 50% of these SWIFT GPI payments are credited to end beneficiaries within 30 minutes. And ultimately, the SWIFT GPI tracker and other value-added services are able to extract critical data from ISO 20022 messages. So really this GPI, what it does is allow end-to-end tracking of payments across multiple banks in real time. So if you think about kind of the legacy methodology where if you're sending a payment that has multiple banks involved, you could really only inquire to a certain bank based on, their part and when they had their interaction with that payment. They had no visibility into, once it's hit essentially their silo and moved on, they have no visibility into where that payment's, at or what the status is. What this GPI does is allows an end-to-end tracking of the entire life cycle. And it gives you really the easy visibility into the payments that have been sent, those that might be in progress, and those that have ultimately been received, which ultimately from a Treasury operations standpoint is going to improve your liquidity management.
So we have our first poll question for the day. Have you heard of ISO 20022 and the recommended migration to this layout? We'll give everyone 2 minutes to answer. Just a quick reminder to the folks on the line, we'll be closing the poll out in just a minute. So it looks like we have our results in. It looks like 6 have heard, 4 have not heard of it yet.
So a little bit of a good mix of both. Hopefully, obviously, people that have heard of it can hopefully glean some additional information. Those who have not, this is the purpose of this webinar, so you're in the right spot. So moving on to the ISO 20022 adoption study. So this will really be a lot of statistics around where we're at around the world and by payment type, things like that. So to start, what you may be wondering right now, if you haven't heard of ISO, is what are ISO 20022 payments? So essentially, ISO 20022 format is a flexible, structured XML payment format, which, like I referenced earlier, was originally developed to standardize payments across the Eurozone for those SEPA payments and things of that nature. ISO message definitions include more data than the corresponding legacy SWIFT messages, so think of your MT101s, therefore far fewer payment failures. So MT101 has really, for the previous, it's been quite some time as that's been known as the international standard. However, the transition to ISO has really become the future with really the further capability around the amount of data that you can pass. So think about various address information, remittance data that you want to obviously send to the bank, for payment purpose, things like that. That has the ability for unstructured and structured remittance data, which I'll dive into a little later, and then other specific tags within that payment file that may vary by different country and bank, and that's really what drives the international standard. Can support high value, low value, and retail real-time payments. So your high value is representing, your real-time gross settlements or any wire payments. Low value represents ACH or SEPA payments that are going to clear, next day or +2. And then finally, the real-time payments represents really the real-time retail, or what you might refer to as the instant payment system. And finally, standardizes the use of end-to-end payment reference, which returns on the bank statement to optimize straight-through processing, automated reconciliation of accounts. So really what this payment end-to-end ID is depending on whatever ERP or TMS system you might be using, it's a system auto-numbered or auto-generated ID that gets passed within your payment file. The banks receive that on their end, and then ultimately they will pass that back as on the reference field of your bank statement. And really what that does, obviously, is allow for not just your date and your amount, for a matching of your bank account reconciliation, but adds another layer of criteria by adding in this end-to-end payment ID. And you'll see that towards the tail end of this presentation when I show you a sample file of an ISO payment. So moving on to the essentially the approach that is taken by SWIFT and been rolled out over the last several years. 3 phases planned for the transition to ISO, but obviously final dates are driven by the users and the banking community and really where the adoption rate is at. So initially, only a closed user groups, which is typically banks, can use ISO 20022. The reason for that is obviously within the banking community, they're going to need to be essentially the first institutions that are able to accept and adhere to this layout. So when enterprises and various organizations are passing those files, they can all adhere to these requirements, accept all the data, and pass back what's necessary to various organizations around the globe. Second is a coexistence period with central two-way translation, so MT to ISO and then ISO back to MT. So users may continue to exchange your MT formats with one another, and then obviously ISO users can continue to exchange the same ISO layout with one another. So really the ISO to MT translation represents if you have an organization sending a bank, your standard legacy MT 101 payment, the bank's going to be able to convert that to ISO on their end. However, when they pass back, they'll be able to really convert that back from an acknowledgement standpoint to your format so that you can consume that within your system. And finally, full functionality for ISO will be after 90% of funds traffic is using this format. So at that point, the MT format will be decommissioned and everybody will be expected to be adhering to the new ISO standard. So this is really just going to show you from a geographical standpoint of where this adoption has taken place. As you can see, the gold stars represent the adoption being complete with the red dots planned for essentially last year in 2019 or later. So as I mentioned a couple of times here, it was really adopted first by the Eurozone, which is why you see the high number of gold stars, and also the APAC region, with North America and obviously South America falling a little bit behind, but certainly catching up within the next 3 to 5 years. So an adoption from a high value payments perspective, you can see that 32% of these payments are live utilizing the ISO format. Next 3 years, it's expected that 45% will be live and ultimately 23% post 3 years or within the future. So as I mentioned, the Federal Reserve having their rollout plan, the goal is the end date at the end of 2023. So that would indicate that obviously this graph should hopefully be 100% by 2023 to probably 2025. So it's really pushing organizations domestically here in America to be proactive in adopting this format before they're essentially forced to do so. Adoption of low-value payments here, so either your ACH or your SEPA payments, as I referenced before. You can see here that the percentage of live is much higher at 88% and 12% planned for the future. So the primary reason for these numbers being inflated is that there's a much lower risk from a low-value payment perspective on using it more as like a pilot test. If you have errors or issues that arise when you're passing these payments, you can always pivot to essentially sending a wire payment or a high-value payment, and obviously it still gets executed in real time and there's no delays in getting your payments out the door. Or if you flip that scenario and you have a high-value payment that you need to get out and there's something going wrong, you don't have many options. You obviously can't execute a low-value payment that's going to settle in a day or two, because that'll obviously cause liquidity issues in getting your payments out the door. And then finally, the retail real-time payments, which really represents a lot more of your person-to-person payments. You can see that 70% are live, with 10% being live within the next 3 years, and finally 20% being live in the future. So these bar graphs here show essentially your payment type by region. The common theme, as you can see on here, is that America is falling quite behind here by all payment types. You have 10% from a high value perspective being live in America compared to 60 with APAC and 30 for the Eurozone, 3% for low value, and then ultimately 7% for the retail real-time payments. So like I said, this really drives home the purpose of America falling a little bit behind here, but trying to catch up within the next 3 to 5 years and rolling that out within their major clearinghouse systems, getting them up and running to really push and move the needle for all corporations. And ultimately, within the next 1 to 3 years, You can see that the low-value payment graph disappeared because it's expected that, that payment type will be live across the world, essentially everywhere. And high-value payments, 40% for America, and a little bit lower for APAC and Eurozone because a lot of, they're already much further ahead than America. So you can see that, the numbers are a little bit shifted there. But like I said, within the next really probably 3 to 5 years, you should be expecting a huge shift and a huge increase from a domestic perspective in the number of payments by payment type that are live. So moving on, how can your organization prepare for ISO 20022? So I'll touch on here, before I get to actual use cases and practical examples that we essentially performed here at Alere, I'll just talk about, some road mapping exercises and what we found to be really useful within the space to, drive this change in an efficient and cost-effective way. So what this shows you right here is really just kind of a process redesign map. From an organization and payment strategy perspective, what we see at a lot of our clients when we go in is, a decentralized and localized structure where if you have business across the world, you obviously deal with time lags and time issues. Those silos obviously make it difficult to do business with each other because of time changes, things like that. And really what our solution is centralization first and foremost is, bringing everything to a central location that'll allow you to, more efficiently transact business, have a skilled and trained workforce more in one spot rather than, in different areas and different business units. Virtualization, having a system that, you can house most of this data in, making it easier for reporting and really just, tracking payments and all that information and eliminating paper trails, things like that. With ultimately a future state, if you look at a centralized payment factory, so like I said, regardless of if you have, multiple systems initiating or trying to execute payments, they all get routed into, a centralized payment factory that's really going to disperse all those to your banking partners and things of that nature, which comes with a enhancement of the database, and ultimately what's most important is scalability and growth. So not just preparing for, the next couple years, but ultimately, projecting this out to the future and making sure that you can adhere to standards and keep growing. From a payments workflow and processes, so what we see a lot, currency, you have many different processes, there's really no standardization, and there's a lot of manual intervention, which makes various activities very labor intensive. So our solution is really simplification and standardization, which obviously enhances compliance as well from a payment and a workflow perspective. The biggest call out here on the future state side is system integrated control. So moving your approval processes from paper and being, siloed or even banking portals, things like that, implementing a system that can house all those different, approval rules, things like that, and your automated workflow to make sure that all your payments get routed to the appropriate people. Obviously dollar limits, things like that come with that. So housing that within one system is going to make this a much more efficient and pain-free process. And then at the bottom, the payments landscape normalization. What we typically encounter is multiple banks and accounts, which really leads to multiple e-banking tools and payment portals, which is quite frankly a big pain for users, especially if you have an increased amount of banking partners. That's obviously a different banking portal for each, having to execute payments from multiple different locations rather than a one-stop shop within a centralized system. So our main solutions are obviously independence. Rationalization is a big one. A lot of times we'll go in and we'll kind of do a banking structure, review or rationalization as we call it. Are you really getting the most out of your banking relationships? Can, various maybe partners or even just accounts be cut down to save on cost? And simplifying that account structure to make sure that accounts are, only set up to do things that they need to really take advantage from, a cost perspective and a bank fee perspective, keep those at a minimum and reduce that dependency on the portals to have, a centralized system or location where everybody's entering payments, and ultimately that leads to the ease of reporting and tracking these and getting information to potentially various business units that are, inquiring about these payments. Moving on, this is essentially one of our examples of a treasury and accounts payable payments data flow. So as I pointed out, you may have, Most clients have multiple systems there. You can see on the left, source 1, 2, and 3 that are initiating payments. However, even with that, the payment gateway in the central is really the important piece here. So you may be, entering payments within multiple different systems, but if you're able to route those or, upload files into one centralized location, or what we might call a payment gateway, where then you can utilize that, essentially the ISO format for all your payments going to your different banking partners, that's really going to make it a lot easier downstream for your organization. Like I mentioned, you're going to be able to, have ease of visibility into these payments regardless of region, regardless of payment type, or even regardless of the purpose. So housing all your banks and account setup, your settlement instructions, things like that, it enhances your compliance checking from an OFAC perspective. And then ultimately, as you see the workflow going to your banks, ultimately getting to your beneficiaries and your payees, and then coming back into that payment gateway would be all your payment acknowledgments. So updating your payment statuses, that gives you an easy look into where your payments are at, if they obviously got to your banking partners, if they've been received, and ultimately if they've been paid, and the end beneficiaries have been credited. So moving on to essentially our ALEER ISO 20022 project methodology. Really, it's based on 6 pillars or 6 phases, we like to call it. As you can see, mobilize, design, build, test, deploy, and stabilize. So starting with mobilize, this is really our standard ALEER cadence, getting all of our documentation and our tools set up and implemented to ensure that the right people are engaged at the right time. So you can see establishing our project management structure, completing a pre-project readiness assessment so that we've gathered all the information we possibly can, so we're not wasting time, asking you questions that we could already have the answers to before getting, engaged on the actual project. And ultimately conducting methodology training for your team so that you guys know, what we're doing, how we're following it, and why we're doing this, and, how we're going to be successful. The design phase is really kind of our requirements gathering phase. So documenting your current state, what you're doing right now, and ultimately building out and documenting any applicable scenarios. So as I mentioned here, if you're doing, there's a much different scope if you're doing, payments across the world, doing business internationally, than if you're just doing that domestically, banking partner relationships, things like that. Those all add, a little bit of work. So that's part of our design phase and really documenting these requirements and then finalizing the plan by ensuring that our timeline is, realistic based on what needs to be done. Moving into the build phase, this is really the configuration and development of, any data elements, integrations, downstream reports. So when you think about whatever system you guys might be using, there's a lot of, that configuration or those data elements that are getting translated into these, these payment files. So from an ISO perspective, making sure all your beneficiary information is filled out to the fullest, so it gets passed within your payment file. All your banking information is correct to avoid errors and an increased amount of testing from our end. And then moving on to the actual testing phase, this is really where we system test the future state configuration that we built and all the interfaces. So when you think about testing with your banking partners, passing them files into a test region, a test environment so that they can validate the contents of that. Obviously involves, the back and forth with them to, identify the errors and then correct it on our end. And, it's really like I said, a back and forth between, your organization and all your different banking partners. And then ultimately, make sure that we're adhering to all the different testing requirements from that perspective and fulfill all the scenarios that we've previously documented so we know that nothing is, fallen through the cracks when we get ready to go live and move to production, which leads to the next step of deploy. So essentially ensuring that our production environment is ready, through a cutover plan and a checklist, making sure that we don't miss anything, going over that with your team, checking all the boxes. Having a contingency plan is always important. If something does go wrong, what is essentially our disaster recovery plan and how are we going to transact business? And then ultimately when we feel like we're ready, execute cutover and move to production. And finally, an important call out is a stabilization period. So here at ALEER, we always offer and encourage some post-go-live support or stabilization. Change is obviously not only difficult, but nerve-wracking. So just to have us there kind of looking over your shoulder, lending a helping hand for any issues that may arise, or even conducting some additional training to make sure that your team is comfortable with the changes going forward.
So we'll give Mike a chance to catch his breath for our second poll question of today. What is the scope of your firm's payment scenarios? First option, all domestic. Second option, primarily domestic, limited international. And third is equal mix of domestic and international. Again, the poll will be open for 2 minutes. The poll will be closing in the next few minutes, so please answer accordingly, and we'll get back to the webinar. All right, so looking at the results, it looks like we have a primary portion of the group having primarily domestic and limited international.
Well, thankfully, ISO is applicable for all. As I said, if you're mainly transacting domestic business, you may have a little bit more of a time with, as I mentioned, the clearing systems in the United States being a little bit behind, but still always better to be proactive rather than reactive and get ahead of the curve. So now I'll move into more of the practical examples from, our Lear end and the use cases, different projects that we went through, and, kind of the differences between them and what made us successful ultimately in the end. So project number one was an ISO implementation for international AP and Treasury payments. So just some, client statistics here based on the industry, loyalty marketing and banking, credit card issuance, transacting international business, as you can see with, business operations in the USA, Canada, and Europe. And then you can just see some company figures there below with employees and different dollar amounts there. So really moving on to kind of the scope of the project and the methodology that was followed. So initially finalizing your ISO format. So as I talked about, working with the bank to gather their specifications that they have on their end and their different requirements for all different payment types. As you can see, high value, low value, and SEPA. So essentially what that entails is taking those different banking requirements, comparing them against the ISO standard. So there's a standard specification that lays out, all the various options or tags within your payment files. And really the end game is mapping those to the system that you're using. So within your ERP or your treasury management system, reviewing and configuring all those different data elements that I've kind of spoke of, your banking and bank account information, all the way down to, your beneficiary or your vendor list, making sure that their banking information is filled out, all your address fields that are required by the bank are filled out and accurate, routing numbers, SWIFT BICs, things like that, to ultimately reduce errors within testing. As I mentioned, vendor beneficiary master data cleanup, so adding international addresses and pay from and to account data scrubs and IBAN. So these are a lot of the different nuances that'll, essentially cause issues with the bank is, missing a full address, an incorrect IBAN, things like that. So it always takes, us time to review with you guys all of, your data input, our configuration as we go through testing. You almost always encounter, a lot of unforeseen issues, but just working with, the teams and our clients to, clean this data up and ultimately troubleshoot any issues that we come across. So our accounts payable ISO setup, setting up any new, payment schedules, pay cycles needed in the ERP. As you can see here, the scope of the payments that were made, so low value payments made in the bank accounts with the same currency out of the accounts payable department, high value payments made in bank accounts where the currency is not the same, so that's our FX payments executed by the Treasury team. Low value payments to APAC with non-English characters, those were remained as being executed in the bank portal. So really what that arises from is, a difficulty with special characters or non-English characters passed within our ISO files, which are still being vetted out by a lot of banks within those regions of the world. So keeping those in the bank portal, the volume on this particular project was relatively low, so it really wasn't a big win to go through, the painstaking process of vetting this out with the bank, keeping those in the bank portal and not messing with that current process to make sure that we get the higher priority, things up and running first. And ultimately, exception and immediate high-value payment handling for EFT and wires, walking through that with the Treasury team and making sure that any errors that we had were obviously troubleshooted in the most time-sensitive manner that we could and getting them resolved. And creating alerts in advance for payments that may cause repair. Just a couple examples. If your bank account currency and your payment currency are different, obviously there may be, a couple more nuances within these payment files, working with the banks to solve those and adhere to all their requirements. And then ultimately with your pay date and your value date, really from a reconciliation standpoint, having, a different value date when you initiate the payment versus when you receive it. Continuing on, Treasury operations review, so really what we focused on with the Treasury team. Vendor validation, I've already touched on this quite a bit, confirming that it's all set up right, bank information, address, etc. Liquidity, so ensuring with the Treasury team that sufficient funds in the necessary currency are available before release. Generating some custom reporting by the various legal entity and bank account to ensure that, essentially hedge your risk against any overdrafts and things of that nature. And then ultimately, Treasury establishing a line of credit for all accounts to cover any shortfalls to avoid these overdrafting of accounts. An important bullet here at the bottom, determining your ideal country migration order. So as you can see here, international business was the case here with a lot of different countries involved with this project. So North America, Canada being first, that angle was really the quickest win for us, getting those live and essentially getting them out of the way. As you can see with the Europe and the Middle Eastern area, there was a lot of different countries, so quite a bit of a longer process. So to get North America and Canada with a sufficient volume, get those up and running before going through, maybe some of the more painstaking or, time-consuming processes with the other various countries that you can see down the list. So a little bit of a busy slide here. Really, you can focus on the boxes that are highlighted in red. That kind of shows the different processes and items that we had to work through that relate to ISO specifically. You can see your swim lanes on the left from the Treasury team and the AP team, but really, it's kind of regurgitating myself here, but inputting your proper, beneficiary information, your settlement instructions, making sure your OFAC compliance is up to date, and ultimately then releasing these ISO payment files to your payment gateway, creating reports downstream so that you have ease of visibility into them, and ultimately getting your acknowledgement files back. So project 2, obviously involving ISO from a cash pool and funding perspective with an insurance company, business across the world, and obviously a huge company here as you look at the assets, revenue, and net income figures that are shown. So just a quick review of the scope. You have your cash flow header and participant account structure, documenting your in-country funding requests for operating needs, developing reports and dashboard views for quick insight into this from an FX perspective as well. And then cash sweep, fund your bi-directional structure to initiate your ISO transfers in high value or low value format as needed. So that really involves more of the front-end configuration to automate the creation of these ISO payments, setting target balances, things like that related to whether it's funding, concentration, or your bi-directional structures to initiate these ISO transfers. And most importantly, at the bottom there, your centralized corporate treasury approval process for ISO transfers. So standardizing that all within one system, automation of routing and things like that, as I mentioned, eliminating, paper approvals and email approvals, things like that, housing that all within a system, with workflow and routing attached to it. And once again, you can see these are all very similar here. Really, it comes down to vetting out your ISO layouts with your different banking partners, adhering to different country requirements, especially in this case with the high volume of international business, and then ultimately getting live with your ISO payments. So the ROI and TCO benefits from these two projects. So really the ISO payment gateway, centralized location, lowers your risk from a regulatory and operational perspective, improves your intraday liquidity funding, lowers the cost of reporting, and improves analytics and data quality, and ultimately automated workflow approval process. So I've kind of hit on these quite a few times throughout the presentation, but adhering to the standard with ISO, staying ahead of the game from a payment file format perspective, ultimately helping you with downstream benefits as you're reporting, your ease of visibility into the payments, easy inquiry to get this information to those who may be requesting it, and then ultimately your workflow being automated. Mobile review and approvals, so that's becoming more and more popular within cloud technologies and within the space, being able to utilize your mobile device, not needing to be on your PC, laptop, things like that, making a mobile-friendly application for approvals. Legacy payment types can be fed into an ISO gateway, allowing for easier integration of subsidiary and or acquisitions. So if you're utilizing, for example, your MT101 legacy format, you're still able to essentially upload a file into a payment gateway where then you can utilize ISO for all different types of payments. And really what that does, as you can see, is with any acquisitions, the onboarding of these is much, much easier. You have that centralized payment gateway, payment factory, to adhere to one file format, which really provides you scalability and growth for the future. And then finally, ease of implementation for payments on behalf of and shared service centers to reduce the number of bank accounts and related fees. Finally, the last project example here, you heard me touch on some cloud software trends earlier, so this was a cloud example that we had from a Lear experience, the industry, investment, banking, and brokerage services, regions, primarily North America and Europe, and once again, as you can see, over $1 billion in revenue as well for all three examples here. Some project guiding principles, so these are really a lot of Lear standards here. What you'll see, I won't read all the bullets on the left, but really what you'll see is, reducing manual intervention, increasing automation is really the key there, representing all the business units, including international, transparency within decision-making to make sure that, the impact is high to users, not only within necessarily a Treasury module, but within others, and making sure, all interfaces are working properly and, different teams across your organization are remaining happy and seeing the efficiency add from a project like this. The scope on the right calls out ISO 20022 bank transfers, high-value payments from a wire perspective, low-value payments, ACH. We talked about the efficiency gain from an account reconciliation perspective with being able to pass more enriched data within these ISO files, ultimately leading you to get this data back on your bank statement, being able to reconcile items much easier and in a much more automated fashion, increasing that hit rate and reducing exceptions. Then ultimately, tracking all of your payments, within one system provides for ease of cash positioning and ease of cash forecasting as well to project forward for the future. Just a couple benefits here to call out. Mainly within the bottom left there, you see under the increased efficiency, cut down on bank portal user licenses, utilizing an actual ERP system to execute these payments, with really just keeping the bank portal as a backup. Allows you to obviously save some money there, from a licensing perspective. Global electronic payments, eliminating any paper trails, and also integration with other financial sub-modules as well. So not just Treasury payments, but when you think about, an accounts payable perspective and things like that, increasing that integration and allowing both teams to be cohesive essentially within one system. And then better audit and control points, so a single system of record that's easily auditable, and ultimately that approval workflow that I've hit on several times. Moving on. And finally, the ROI and TCO benefits from this cloud project. Technical support for a singular ISO approach. It really cuts down on support costs and reduces operations risk. The ability to standardize on the number and types of bank connections. So I touched on the bank rationalization and kind of the effect of multiple banking connections, especially transacting international business, being efficient with that and from, really cutting costs. Reduction in file transfer fees by consolidating into fewer files. So sending, a file for maybe a high value payment and a low value payment, you get charged per file by the bank. So keeping that to a minimum and really vetting out that business process to, once again, save on costs. ISO rules for end-to-end payment ID, that once again touches on the bank reconciliation, simplifying global processes, as we mentioned, and go here quite a bit with ISO. OFAC and AML, so from a compliance perspective, can be centralized to improve oversight, automate alerts, and ultimately for regulatory audit reporting and significantly reducing your compliance exceptions. Finally, we have arrived at the sample file. So really what you see here, if we have any technical folks on the line, this is probably what you've been waiting for. So kind of from the back end, the actual ISO payment file. So what you'll see here is from the debitor side or the payer side. So if you're executing these out of your system, this is something what you'll see. And if you compare it to a lot of the legacy formats, you'll really notice the difference in the amount of data that can be passed. So really what you see here is your different banking information. So from a legal entity perspective, from a bank account, your bank account number, if you're using a BIC or you're using an ABA, and then ultimately the banking institution that you're partnering with and their address information as well. Moving on to the creditor side or the payee side. So what you can see towards the top left of the screen there is that end-to-end payment ID. That's what I've referenced several times, which obviously streamlines a downstream reconciliation function for your Treasury team. You can see that URGP tag for an urgent payment, which would really call out your high value payments compared to a non-urgent payment, which is more your low value. And then this really follows the same cadence, but from the payee side, their bank account information, bank routing numbers, BIC, things like that. And finally, the remittance sample. So here you'll see an example of a structured remittance. There's unstructured and structured. From this perspective, the one main call out is you can see your invoice number is included in there. So for ease of tracking, obviously attaching an invoice number, having that passed within the payment file, and then ultimately getting that back. There is also unstructured remittance information that you can pass, essentially where you have a maximum of 140 characters to pass any free text you might want that should ultimately get returned on your bank statement, give you increased insight into those transactions and transparency. And finally, just some sources here for reference. As we said, this webinar will be available after. I encourage you to dive into these sources. There's a lot of interesting statistics and facts about where the industry is going that I referenced throughout.
We'll take a quick pause before the webinar wraps up for our final poll question of the day. Does your firm have a plan in place for ISO 222 adoption? Option 1 is yes, option 2 is no, and option 3 is work in progress. We'll give everyone a minute to answer, and we will have the results follow. All right, the results are in, and it looks like a majority of the folks on the line have work in progress, which is definitely good to see. Also, we have a portion that have answered no, and then yes. There's no one in there, right?
Certainly, we'll include contact information. If anybody on the phone wants to have a discussion, we'd be more than happy here at Lear with our experience to discuss this with you. You obviously have a little bit of a time period here before it becomes a certifiable standard, but always better to be proactive, as I mentioned.
And for the remaining portion of the webinar, we will open the floor for any questions. All right, it looks like we have one that just came in. What is the typical timeline for an ISO 222 adoption project?
So it's really going to depend on, I mean, quite a number of different factors from, your banking structure, how many different banking partners do you have, along with, where you're transacting business. If you're looking at just one or two, banking partners or things of that nature domestically, it's obviously going to be a lot less time. Just to give a number, probably a minimum of 3 months for a bank, just between the back and forth, them getting all the right people in line on their end, and then working with them through the file format testing. But obviously, with a higher degree of, international and domestic, different payment scenarios and also different banking partners will increase that timeline.
So we have another question that just came in. What is the biggest challenge undertaken with ISO 222 implementation?
So really the biggest challenge is the differing requirements by country and by banking partner as well. ISO is obviously being adopted at a very high rate right now, but, there's not necessarily one gold standard or, 100% same format by a different bank or, by a different country. It's, probably more, 98, 99%, but obviously that causes a couple of different nuances by your different banking partners, by where you're transacting business and things of that nature. So normally, walking through those and making those changes can obviously be cumbersome in the back and forth with, being kind of at the mercy of the banks and their responses. Really kind of becomes the biggest challenge, for organizations and for us at Lear helping organizations to, make sure we meet and adhere to timelines based on different projects.
And the third and final, well, no, actually there's a couple other questions, but another one that just came in, what are the potential consequences of falling behind the curve regarding ISO 222 adoption?
Yeah, so you heard me reference kind of, the legacy formats being decommissioned at some point. When ISO is really adopted completely as an international standard, you'll still be able to pass those legacy formats, whether it's your MT 101s for international or even domestically your EDI formats, but you're going to be charged by your banking partners because they're going to be required to essentially convert those payments into the new ISO format because, as you can see, all the, the different clearing systems across the world are moving to this ISO, so they're going to require it. So it's really going to cause an increase in your banking fees based on this conversion. So obviously staying out ahead of it will eliminate that risk, of a cost increase.
Thanks, Mike. So unfortunately, we are short on time today, and there are a couple questions that we are not able to get to, but we will follow up with all questions after the webinar. And a quick reminder for all folks, a recording of today's presentation, as well as a link to register for our next webinar will be sent out in the next few days. Any additional questions that you may have or to set up a phone conversation, please feel free to reach out. We really appreciate your time, so thank you everyone for attending, and have a great rest of your day.